The biggest mistake you can make with your money is copying the winners while completely ignoring the losers. This hidden trap destroys wealth every single day. The best way to see it starts on a tense tarmac in 1943. You are standing on a cold dirt runway. You are waiting for World War II bomber planes to return from a dangerous mission. The sky roars as the heavy machines finally land. You can smell burning fuel and hot metal. The planes are safe, but they are completely torn up. Mechanics rush out to check the surviving aircraft. They run their hands over the cold metal. They find bullet holes everywhere. The damage is heavy along the wings. The tail is chewed up. The main body is full of holes. The crews start to draw a map of all this damage. They want to see exactly where the planes are getting hit the most. The military leaders look at this map and come up with a simple plan. They need to protect their pilots. So they decide to add heavy metal armor to the planes. But armor is very heavy. They cannot cover the whole plane or it will not fly. They have to choose the right spots. They look at the bullet holes to make their choice. Their idea makes perfect sense at first. They will weld thick steel right over the spots that show the most damage. The wings and the tail took the most hits, so those parts will get the extra armor. It is a straight and logical military strategy. You find the weak spots, and you make them stronger. But a man named Abraham Wald steps in to stop them. He is a very smart mathematician. He works for a special military team called the Statistical Research Group. His job is to look at numbers and find the hidden truth. He looks at the exact same map of bullet holes on the wings and the tail. Wald tells the generals they are making a huge mistake. They are reading the data all wrong. The military thinks the holes show where the planes are weak. Wald sees something completely different. He realizes the generals are only looking at the planes that made it home. They are entirely ignoring the planes that fell out of the sky. Wald shares his massive realization. The bullet holes do not show where the planes are weak. They show where a plane can take a hit and still survive. But what about the planes that got shot in the engines? What about the ones hit right in the front cockpit? Those planes never made it back at all. The armor must not go where the holes are. The armor needs to go exactly where the bullet holes are missing. Those clean, untouched spots on the returning planes are the real danger zones. A single hit to those empty areas meant fatal failure. The missing planes hold the real answer. This story of World War II bomber planes perfectly shows a powerful trap in human thinking. We call it survivorship bias. It is a logical error that tricks your brain every single day. Survivorship bias happens when you only look at the people or things that win a tough test. At the exact same time, you completely forget about everything that lost. This same trap ruins your choices with money. When you look at investment choices or market data, you usually only see the winners. You see the rich people and the wild success stories. But you never see the silent graveyard of financial failure. If you only study the winners, your analysis is broken. You will put your money in the wrong place. It is just like putting armor on the wrong part of a plane. Picture a person sitting alone in a dark room. They are looking at the bright, glowing screen of a trading app on their phone. Everywhere they look, they see bold headlines about winning money. The screen flashes with bright green numbers and charts that only go up. Glossy financial magazines show smiling billionaires who beat the odds. These glowing screens and magazines are the modern version of those returning bomber planes. You are only seeing the lucky stocks that survived the harsh market. You are only reading about the wealthy people who made it to the very top. The app shows you the absolute best choices of the day. It completely hides the thousands of choices that lost all their value. When a new investor sees all this winning, they feel a huge rush of hope. They read a famous book about how a billionaire made their first $1 million. They decide to copy that exact same plan step by step. They buy the exact same stocks at the exact same time. They feel completely safe and sure that they will get rich too. This feeling of safety is incredibly strong, but it is deeply flawed. The new investor feels very smart because they are following a proven path. They do not realize they are walking right into a dangerous trap. They are falling victim to survivorship bias. They are only studying the lucky few who survive the brutal game. Let us look at how the financial world actually tracks this success. A big investment company really wants you to buy their mutual fund. A mutual fund is just a large pool of money from many people used to buy stocks. The company runs huge ads showing a beautiful, glossy chart. The chart proves this fund grew by 15% every year for 10 full years. The math on that glossy chart looks perfectly real and safe. The company gathers data from the past decade to prove their team is incredibly smart. They show you exactly how much money you would have made if you invested early. The numbers are printed in large, bold letters. It looks like a clear, safe bet based on very hard facts. But there is a hidden trick happening right behind those numbers. Investment companies do not just run one single fund. They start dozens of different funds at the exact same time. Some of those funds will do well by pure luck. Most of those funds will fail and lose a lot of money. When a fund fails, the company does not keep it around to show you. Instead, they quietly close the doors on the losing funds. Sometimes they mix the bad funds into the good ones to hide the heavy losses. This completely changes the recorded history of the market. When you look at a 10-year chart of the whole industry, the losers have been totally erased. You are only looking at the surviving funds. This hidden trick costs normal people a massive amount of money. An everyday person takes their hard-earned retirement savings to the bank. They put all their cash into what looks like a totally safe choice. They trust the data because the charts show a long history of winning. They expect their money to grow safely over a long time. But the real chance of winning is actually very low. Because the record of failure was wiped away, the market looks much safer than it really is. The everyday investor is buying a ticket for a dangerous game. Their whole analysis is based on broken data. Just like Abraham Wald saw with the World War II bomber planes, they put their armor in the exact wrong spot. This hidden trap does not just live in the stock market. It sneaks into our everyday lives and personal choices. It changes how we think about getting rich. We stop looking at boring numbers on a screen. We start looking at famous people instead. We want to know exactly how they made their money. We watch the richest business owners in the world. We want to copy their daily secrets. But looking only at the winners creates a huge problem. It completely distorts our view of how wealth is actually built. We forget to look for the missing planes. We assume the winner's path is a safe road for anyone to walk. Think about the famous stories we hear all the time. A smart kid drops out of a good college. They start a tiny company in a cold, dark garage. They work day and night with their best friends. They build a new computer or a fun phone app. They sleep on the floor and eat cheap food. Soon, they take a massive risk with their business. They put absolutely everything on the line. Then, the company grows huge and goes public. They become billionaires almost overnight. Their smiling faces are splashed across every magazine cover. The whole world cheers for their amazing journey. Society treats them like perfect heroes of money. But the cold math behind this story is very dark. The famous billionaire is just one surviving plane returning home. We never see the invisible graveyard of broken dreams. This graveyard is filled with thousands of other young kids. They had the exact same big ideas. They had the same drive and the same energy. 10,000 other people dropped out of school too. They started companies in their own messy garages. They took the exact same massive risks with their money. But their companies ran out of cash. They went totally bankrupt. They quietly faded away into normal jobs. You will never see their faces on a magazine cover. People selling business books and seminars ignore this giant graveyard. They only study the one billionaire who made it. They look at the winner's life to find special clues. They try to work backward to find a magic formula for success. They write down every single daily habit the winner has. They package this as the ultimate secret. The books tell you to copy these exact habits today. They tell you to wake up at 4 in the morning. They say you must ignore everyone who doubts you. They tell you to borrow lots of money to chase your dream. They say these specific steps are the guaranteed path to great wealth. They promise you will win. Now imagine a normal person trying to follow this advice. They wake up early in the dark every single day. They ignore all their worried family and friends. They borrow a huge amount of money from the bank. But their new business still fails. They lose absolutely everything they have. Their heart is completely broken. The feeling of failure is completely crushing for them. They did everything the famous book told them to do. They followed all the rules perfectly. Then comes the painful truth. They realized the book was a total lie. They were sold a broken map. The map was drawn only by the lucky survivors, leaving out all the deadly traps. The biggest trick in the stock market happens right out in the open. You look at a famous list of companies like the S&P 500 index. This list tracks the biggest businesses. Over many years, the chart goes up and up. It looks very safe. It looks like big companies always win. But you are only looking at the planes that came back. Here is what the famous index hides from you. When a huge company starts to fail, it gets kicked off the list. It is quietly removed. Then a brand new winning company takes its place. The list stays full of winners. The losers vanish into thin air. If you only look at the final list, the market looks much safer than it really is. So how do you fix this broken view of your money? You must start thinking like Abraham Wald did during World War II. Stop looking at the shiny armor. You must change your investment mindset completely. Stop asking what the winners did right. Start actively looking for the missing planes. You must ask what happened to the people who tried this exact same thing and failed. This simple shift changes how real wealth is built today. Smart planners now use strict rules for their financial analysis. They do not just look at the funds that survived the last 10 years. They dig deep into the old archives. They pull up the records of every single fund that started on day one. They force the data to include all the dead companies. You can use this exact same rule for your own money. When you plan your retirement, you build a safety net. You do not just plan for the best years, you plan for the worst times. You look at the business ideas that crashed and burned. By counting every single failure, you make better choices. You stop betting everything on one lucky stock. The human cost of ignoring survivorship bias is very real. Think about a family putting all their savings into a single hot company. They only see the success stories on the news. They do not see the thousands of workers who lost their jobs when similar companies went bankrupt. When that hot company suddenly fails, the family loses their entire future. But when a family understands how this trick works, everything changes. They stop taking crazy risks with their hard-earned paychecks. They build slow, steady wealth instead. They buy broad investment funds that do not rely on just one lucky winner. This protects their children. It keeps their home safe. It gives them true peace of mind for the long run. The shockwave of this idea started a long time ago. In 1943, Abraham Wald wrote a famous math paper for the military. That single stack of paper saved thousands of young bomber pilots from falling out of the sky. Today, that exact same math saves millions of normal people from losing their life savings. The hidden graveyard always holds the most important truth. The next time you see a wealthy person standing at the top, look closer. Do not just stare at their shiny medals. Do not just copy their exact steps. Look past them. Look out into the quiet, empty field behind them. That is where the missing planes went down. And that is where the real secret to keeping your money safe is waiting to be found.